Commercial real estate investments are usually done through syndication. A real estate syndication allows individuals to pool their resources together to purchase properties much bigger than you could afford or manage on your own. And these types of investments tend to offer higher returns to you with less risk involved. Here's how it works. Each syndication is made up of general partners and limited partners. At Cash Cow Investments, we act as a general partner. The limited partners are passive investors. You get to invest your money in the deal and become a part owner of the property. Yet, you don't have to do any of the heavy lifting. We find, we analyze, and we buy the properties that have the best investment potential for you, the investor. We are generally looking for value add deals in areas of growth that have a stable, diverse employment base. We too generally invest in each and every one of these deals. After all, we would never bring an opportunity to you, the investor, that we wouldn't invest in ourselves. We look for value add deals because these types of properties have the ability to increase in value with a strategic business plan, such as increasing rents up to market level, improving the operational numbers through minor renovations, and lowering expenses. As the general partners here at Cash Cow Investments, we manage the investment throughout the entire life cycle, from the purchase to the sale. We sign on the loans and we manage the property. We take care of everything for you, our investors, so you don't have to. Your first step as a potential investor is to schedule a quick 20-minute introduction Zoom or call. And let's make sure that this relationship is a good fit for both of us. Once that's complete, you'll be able to subscribe to Cash Cow Investments. And once we find a deal or an opportunity that meets our targeted returns for you, the investor, we will alert you. At this point, you'll have an opportunity to review the deal and make sure it's a good fit. Then we will move on to about a 30-day due diligence period to make sure that everything on the property checks out. If anything unexpected comes up, we renegotiate that deal or pull out completely. We take a conservative approach to all of our deals and opportunities. Before we get to what kind of returns to expect, let's quickly go through the process of how your returns are made. So each month, rent is collected from the tenants. But before we can split up that income, we first need to set aside our overhead expenses, such as property taxes, vacancy cost, insurance, property management fees, repairs and maintenance, and a few other incidentals. Whatever is left after that is considered cash flow. These distributions of cash flow are returned to you, the investors, are typically distributed on a quarterly basis. Financial updates on how the property is running will be provided regularly. Now that you have an understanding of how the process works, let's spend the last minutes of this video going over our investor returns, the Mooo'la. So at Cash Cow Investments, we offer you an equity percentage of the property based on the amount of the capital invested. This is usually done with a 70-30 split, with you, the investors, owning 70% of the deal. The targeted returns we look for in a property have an annual ranging return from about 15 to 19%, and a creamy cash-on-cash return of about 7 to 8%, which gives you an overall internal rate of return between 12 to 16%, and that's Mooo'la. So let's compare this to the stock market, which has earned on average 9% over the last 30 years, and it can be very volatile. Now let's talk about the sale. Also knowing the exit strategy. We build our exit strategy into the opportunity from the start. We do this with conservative underwriting that takes into account the best time to sell and make you the highest return. This is usually done once renovations are completed and the rents are raised to market value. This is when the property reaches its maximum NOI or net operating income. And once the investment is sold, the profits are divided and distributed to each of you, the investors in the opportunity. Investors receive back their initial investment plus all of the property profits from the sale, generally offering you a higher return than any other passive investment out there. And as a passive investor, you don't have to worry about things like being a landlord, answering calls from the tenants, or paying monthly expenses. Leave that to us. When you invest with Cash Cow Investments, you won't have to work for your money. Your money will be working for you. And that's the beauty and power of passive real estate investing. Thank you so much for watching this brief presentation. And if you want to get started building your passive wealth in real estate investing, please use the link below. Sign up for a quick call. And for more information and educational resources, please feel free to browse our website at Cash Cow Investments and receive the newsletters, the texts, and the emails. We look forward to working with you. Cash Cow Investments, your concierge in real estate, turning your money into moolah.